Property investing is full of advice, but not all of that advice holds up. In this video, we're going to be breaking down 7 property investing myths and sharing the truth to set you up for success in your future. If you're starting out or you're a seasoned property investor, you need to watch out for these property investment myths and make sure they don't trip you up. If you are a seasoned property investor or even a beginner, you need to be wary of these 7 beliefs that could potentially trip you up in your property investing journey. Number 1 on our list is buy and hold is the best long-term strategy. This is from the 2000s. Buy and hold, set and forget. You never have to worry about property again. Now, it's not quite true. You need to buy in the right markets over the right periods of time and consider selling down some of your assets strategically to build out your asset base. And that's certainly what I've done myself. I've even sold one of my Brisbane properties to buy other properties and continue growing my asset base. So it's not a buy and hold forever strategy. It's about being strategic with the property decisions that you're making. In my own investing journey, as you can see, this is myself and my late wife, Emily, at our first property, and we renovated to add value, to create equity, and to fast track our process to building the asset base. And so that is the truth when it comes to myth number 1, that I added value rather than waiting just for the market to rise. And that's how we were able to create a multi-million-dollar property portfolio. And we did bigger and bigger projects. This is me standing out the front of our raise and build project where we spent $850,000 to $900,000 lifting the house, creating a 2-bed, 1-bath home into a 5-bed, 3-bath, 2-car home with a swimming pool and a shed and a carport. And so you can scale these projects over time. Number 2 on our list is you need a big deposit to get started and break into the property market. Now, let's unpack what the real truth is that the government has just released the 5% deposit scheme. You can also look into accessing your parents' equity if you're lucky enough to have parents like that, or you can use lender's mortgage insurance to get in right now. You shouldn't be waiting. For our first property, we had a 5-6% deposit. And we were able to leverage ourselves to get into the market and add value and go again, as we aggressively saved as well. We were saving about 60% of our income at the time. And so work with the schemes that are available. When I was buying, we used the First Home Super Saver scheme. If I was buying today, I'd be using the 5% government scheme and getting access into the market earlier to continue building that asset base. And so don't think you need to save a 20% deposit when you could break in sooner. Number 3 on our list is your first property should be your own home. Now, what's the truth with this? Is that your first property should unlock your next property purchase. It doesn't have to be your own home. Your first property could be an investment property in a corporate trustee and trust structure. It could be a deal that sets you up for success into the future. When Emily and I bought our first property, this is a property that we bought in 2024 called our Bray Park Bomb project. But when we bought our first property, we bought it with the mindset that this wasn't a family home for us, that this was a stepping stone to our financial future, to more choices. So Emily could potentially be a stay-at-home mum, which was our dream as a family, and that I could have more choices with my work and not be tied to my day job and needing that active income and relying on work for holidays and for choices. And so use your first property as a catalyst rather than just thinking about it as your own home. Use it as a catalyst to help you build the asset base and leverage into your next deal. Number 4 on our list when it comes to myths is chase capital cities and hotspots. Now, what's the truth? The truth is that you should buy where growth is coming, not where growth has been. You shouldn't be worrying about past performance, you should be worrying about future performance. And so whether you're looking at Melbourne or Sydney or Brisbane or Coffs Harbour or Darwin or Townsville, any cities across Australia or major regional markets, look at where the growth trajectory of those areas are and look at the data behind it, not just the data, but the qualitative factors as well. Put that data all together to make an informed investing decision. And so generally, most investors are going to be growth focused first and then cash flow focused as they build out and become more mature in their property journey. And so for myself, I've always been focused on where the growth is. Now that's why I've invested so heavily since 2018 in Brisbane and Southeast Queensland. If I saw that there was greater growth potential over the midterm in other markets, I would be buying in those markets. But I have an investor's edge, I have a buyer's agency edge, I have a local knowledge edge, as well as an understanding of the growth potential over the next 3, 5, and 7 years. And so that's why the truth is you need to buy where the growth is coming, not just where it's been. Number 5 on our list is you should wait for the market to crash and then jump in and buy, because that's going to give you the best outcome. Now, what's the truth, and this myth is pretty easy to bust, to be honest with you, is that by the time the crash comes, you could be priced out of the market. Properties tended to grow 8 out of every 10 years, and over a 30-year time horizon, it's grown roughly at a 6 to 8% compound rate if you're looking at the major cities. Even your regional markets have been 5-6% compounding growth over a 30-year period. And so Martin North and these commentators, I've seen some recently about the crash is coming, the crash is coming. They've always called a crash. The reality is that the government is incentivized and is going to continue to money print. It's going to continue to inflate assets over a long period of time. And there will be crashes. There always are. It's whether you can weather those storms and you're buying and investing for the long term. Because if 8 out of 10 years are up and 2 out of 10 years are down, then over the long term, the assets are going to continue to grow over time. Now, you need to be sensible and have your risks and buffers in place, but don't be caught on the fallacy of waiting for a crash when you could be putting your money to work and building that asset base year on year. Number 6 on our list when it comes to myths is that the numbers tell you everything about the deal. All you need is the data. Don't worry about the visuals or what you see in terms of the property. And the truth is, you do need to have other considerations in buying that asset. The numbers won't warn you about the meth lab next door or that there's termite damage all through the entire home. You can't just take a numbers-based approach. I find it really interesting that some investors think you can do data only everything. I think there needs to be a physical and a qualitative aspect in terms of the property purchase as well. What do the locals say about the area? What are the school zones that are important? What is the condition of the house, the roof, the structure? Are there ways that you can add value? Could you do an extension? Could you add a 4th bedroom internally? It's not just about the numbers on paper, it's about the qualitative factors as part of that bigger picture as well. That's one of the reasons we specialize in Southeast Queensland rather than being one of those buyer's agents that try and buy all across Australia. It's because we intimately understand the Southeast Queensland market. We're locals. I've grown up in Brisbane. I grew up in Logan, would you believe? I've been in Southeast Queensland for over 25 years, and we understand these areas and the qualitative factors that you need to consider as well. So you can't just buy purely on the numbers. Number 7 on our list in terms of myths is if the bank says yes, you're just good to go. There's no worries. The reality is that you need to understand that the bank's going to approve the loans. They don't help you build a property portfolio. And you need to be strategic with the brokers and the banks and using the funding and finance to build your asset base over time. One of the reasons I've been so successful in building a $10 million property portfolio was that I understood that I was working the brokers and banks for my success, not the other way around. And so when I got access to finance, I had a vision of who I was going to use next as a broker or a lender and how I was going to continue to build my property portfolio. CBA doesn't care about my financial future. NAB doesn't really care about my financial future. They care about having security over the title of a property and that I'm going to be able to make repayments in their calculators. They don't care about me building an asset base. And so if NAB says to me, we're not going to lend you any more money, well, I'm going to look at other 2nd and 3rd tier lenders to continue growing my property portfolio and getting access to the right deals at the right time. And so if you get a no from a bank, or even if you get a yes, be strategic about your future and building that property portfolio out over time. That's how I was able to go from 1 to 3, 3 to 5 million, 5 to 10 million. It was about not listening to the banks and what they wanted. It was about understanding the strategic approach in building a property portfolio. And that's why my experience as a chartered accountant sets me apart from other buyer's agents, and why Purpose Property as a business helps our clients in strategically buying the right assets for your financial future. So if you are interested in getting some help and looking to buy a property in Southeast Queensland in the next 3 to 6 months, head over to purposeproperty.com.au to book in a free chat with myself. We'll We'll sit down and have a chat about your specific circumstances and how we can help you secure that next property deal. So it's been fun busting these 7 myths here with you today. Also give this video a click over here and I'll see you in the next one. Peace.